Have you ever imagined a world where money doesn't lose value overnight? A world where you can transfer money across countries in seconds without any banking delays or transaction fees. It may sound like a futuristic dream, but this is slowly becoming reality with the rise of stablecoins. While Bitcoin, Ethereum, and other cryptocurrencies are known for their price volatility and headlines, stablecoins are quietly changing the financial world. They're not here to make you rich overnight. Instead, they're here to redefine what money really means in the digital age. So, what exactly is a stablecoin? It's a type of cryptocurrency designed to maintain a stable value, typically pegged to a real-world asset like the US dollar, euro, or even gold. For example, 1 USDT Tether usually equals $1. This stability makes stablecoins different from other cryptos. While Bitcoin might fluctuate by thousands of dollars in a day, stablecoins aim to stay consistent. That's why they are becoming popular, not just among crypto traders, but also among everyday users, businesses, and even governments. Stablecoins come in a few different types. First, there are fiat collateralized stablecoins, which are backed by real money held in bank accounts. Examples include USDT and USD. Then, there are crypto-collateralized stablecoins like DAI, backed by other cryptocurrencies such as Ethereum, and managed using smart contracts. So why is everyone talking about stablecoins? What makes them important? The biggest reason is global payments. Traditional cross-border transactions can take days, come with high fees, and require bank approvals. With stablecoins, you can send money to anyone, anywhere in seconds, with minimal fees. Freelancers are accepting USDC as payment. Traders use stablecoins as a safe zone during market volatility. In short, stablecoins have real-world utility that goes far beyond speculation. Governments around the world have started to take notice and action. In the United States, the SEC and Federal Reserve are closely monitoring stablecoins, raising concerns about reserve transparency and systemic risk. The European Union has introduced MiCA regulations to bring crypto assets, including stablecoins, under legal control. China has taken a more aggressive stance, banning private crypto but launching its own centralized digital currency, the digital yuan. India, while still without a clear law, sees growing use of stablecoins for international payments. Amid all this, CBDCs, central bank digital currencies, are also on the rise. These are government-issued digital versions of fiat currency, often inspired by stablecoins but fully controlled by central banks. Countries like Sweden, Nigeria, and even the US are exploring or piloting their own CBDCs. This signals a clear shift. Governments recognize the potential of digital currency, even if they want control over it. But stablecoins are not without risks. One major issue is centralization. Most stablecoins are issued by private companies. If those companies don't actually hold the reserves they claim, or if they shut down, users can lose everything. A sudden policy change in any country could limit or ban their use. And of course, technical risks like smart contract bugs or system failures can cause major disruptions. Despite these concerns, stablecoins continue to grow. That's because they solve real problems. They're fast, accessible, and efficient. That's a game changer. So now the big question: are stablecoins truly the currency of the future? Well, they may not completely replace traditional money, at least not in the near future, but they will absolutely change the way we use and understand money. They offer a new level of freedom, speed, and control. Whether it's for everyday transactions, savings in unstable economies, or running a decentralized finance ecosystem, stablecoins are already playing a key role. The future will likely be hybrid. We'll see governments issuing CBDCs, private companies running regulated stablecoins, and fiat currencies still coexisting. But the traditional money system as we know it is being upgraded, and stablecoins are at the heart of this evolution. In the end, stablecoins may not be perfect, but they represent a crucial step toward a borderless, digital, and inclusive financial future. They're not just a trend, they're a transformation.